Right. Well, good afternoon, everyone. We're well over 100 people on the webinar, so we'll get started. Firstly, thank you all so much for joining us this afternoon. This is our 11th webinar that the Danos group has hosted. Today we're going to be looking at navigating regulatory financial crime updates and evaluating and enhancing controls. For those of you who don't know me, my name is Dennis Spearman. I'm one of the managing directors here at the Danos group. I am responsible for all our permanent compliance and financial crime recruiting in Europe. I'm based here in London.
Hi everyone, my name is Bradley Handler. I lead our compliance, financial crime and risk interim hiring here at Danos Consulting.
So welcome everyone, our webinars have been hugely successful. As I said, this is number 11. Last time we hosted a webinar around crypto focus, Bradley had been speaking with Francis Murray, one of our speakers, who Francis works with Russell-Cooke, suggested working and collaborating together on today's webinar. So massive thanks to Francis and to Edward for their help getting this all set up. We're really pleased to be finally bringing to you, this has been the biggest turnout we've had. We've had almost 400 people accept the invite to join the webinar, and numbers are looking really good.
Yeah, perfect. So just to run through some house rules, just because we don't really want to interrupt the speakers once hopefully they get into full flow. Basically, please do keep yourself on mute if that's okay, just so we can, so as I said, the speakers can just say their piece, and obviously we can then roll through this as nicely and as quickly as we can. If you have any questions for the speakers throughout, which I'm sure hopefully a lot of you will do, please do use the chat function on Zoom. Write as many questions as you like, and we will have a Q&A at the end, and we will ask as many as we can in the time that we have left to the speakers. And also we will be doing some live interactive polls throughout as well, so you might see them come up on your screen, so please feel free to join in as much as you can, just so we can get a little bit of interaction with you guys.
Great. To kick things off, for those of you who don't know about the Danos group, we are the leading governance recruiter globally. We've been around for about 20 years. With offices here in London, Hong Kong, Singapore, and New York. We provide recruitment solutions globally across legal, risk, compliance, and financial crime, from a retained search perspective through to contingency, as well as supporting our clients with any contingency or interim project-related solutions. From London, we recruit across the Middle East, and as I said, we've got hubs in all the major financial service centres globally. So that's us.
We've got three fantastic speakers today. The first in the form of Francis Murray at Russell-Cooke, who obviously we've been in collaborations in setting this up with today. We've got Genevieve Rose from Danske Bank, and we'll be concluding with Alan Ketley of the Wolfsberg Group.
Thank you to all three. And to kick things off, I'm delighted to introduce Francis Murray of Russell-Cooke. Francis is a partner with Russell-Cooke, has been there since May 2022, and is responsible for helping bolster and build a financial crime offering. So Francis, over to you.
Thank you, Bradley, Dennis. Much appreciated. A warm welcome to this afternoon's session on financial crime. As I have been introduced, I'm Fran Murray. I'm a financial crime lawyer and partner at Russell-Cooke. My wonderful legal assistant, Edward Griffin, will be assisting with my slides this afternoon. Thank you again to Bradley and Dennis for helping assist in organising this afternoon's session, and everyone at Danos Group, together with my fellow speakers, who I'm very excited to hear from. So my segment of this afternoon's session will largely centre around suspicious activity reports, politically exposed persons, and sanctions. And just so you know how this interlinks with my practice and the financial crime department at Russell-Cooke, if I'm representing an individual, I'm representing a high net worth or ultra high net worth individual or tier of professional, teacher, doctor, lawyer, accountant. Alternatively, I represent corporate entities in complex, high value, often multi-jurisdictional financial crime cases, whether it be from a contentious angle or, in the cases that I'm due to cover imminently, non-contentious and the regulatory regimes surrounding financial crime. and the landscapes and the ever-changing regulation, as we've seen over recent months and years. As you're all in financial services, I'm sure this will be super, super relevant. And we're starting with suspicious activity reports. I deal with a number of suspicious activity reports and have over the last 12 months seen a complete uptake in instructions, often in high value property transactions, but also in corporate transactions. And of course, the banks, and one may say, very excitable compliance officers are using the SARs regime. So just to go back to basics, a suspicious activity report is a report made by a financial institution, and that can be a bank, but it can also be a law firm or another body that is regulated. And this suspicious activity report is made to the National Crime Agency, and it will centre around suspicious or potentially suspicious activity. And the mechanism of the suspicious activity report means that they will alert law enforcement to potential instances of money laundering or terrorist financing. So persons working in the regulated sector, which I'm sure a number of those who form part of our audience this afternoon are required under Part 7 of the Proceeds of Crime Act and the Terrorism Act 2000 to submit a suspicious activity report in respect of information that comes to them in the course of their business, if they know, suspect, or have reasonable grounds for knowing or suspecting that a person is engaged in or attempting to money launder or terrorist finance. Now, what I'm seeing at the moment, I'm dealing with a number of account freezing orders, which is a topic area in itself and for another day. However, ordinarily, an account freezing order is being granted following a suspicious activity report being submitted by a financial institution, and the mechanism is being abused a lot of the time. And it's probably over caution. I know we've got, I have fellow speakers from financial institutions, and I'm sure they will talk to this and the reasons for this. But what's happening is it means that CEOs, directors, and so on, their operations are completely grinding to a halt. Their business bank accounts are frozen. They can't pay their employees' salaries and so on, and they are actually devastating. So I think that goes to more of a conversation around should there be more regulation, and should the thresholds be different in terms of the granting of or the submitting suspicious activity reports. That individuals who do not work in the regulated sector, although they're not obligated as those that do work in the regulated sector to submit a suspicious activity report in these circumstances, they may well want to, and it would be, in my view, advisable to, because any individual can assist in the facilitation of money laundering if they know or suspect they are part of money laundering activity, or they are handling criminal property and they're doing something to assist another in terms of handling that criminal property and potentially the proceeds of crime. So if you are not in the regulated sector, but you are of the view you are handling monies which you suspect could be forming part of a money laundering operation, make that suspicious activity report. It's better to be safe than sorry. In fact, I had an individual, he was actually, he was based in the city and he was regulated, but the suspicious activity report wasn't concerning his professional status. It was concerning his personal affairs. But to protect himself professionally, he's made a suspicious activity report, and the National Crime Agency said, why are you doing this? But he wanted to err on the side of caution, and quite rightly so, because with that response, albeit the National Crime Agency are saying, why have you contacted us? Essentially, we have that coverage. We have a defence against money laundering should anything come to pass going forward. Next slide, please. So, suspicious activity reports continued. Where a bank account has been frozen following a suspicious activity report to the National Crime Agency, there is an initial period, and it's a 7-day notice period, and it's 7 working days. And during this time, the National Crime Agency can decide whether to investigate the bank account or a specific transaction. If further time is required for the investigation, then this is known as the moratorium period, and that runs for 31 calendar days, and that's 31 after the 7 days. And that's a maximum of 42 days. And following the conclusion of the moratorium period, the bank or any other institution holding the money is required to release the account or process any transactions in the absence of a court order. Just so you all know, the National Crime Agency are dealing with thousands upon thousands of these daily and weekly and monthly and yearly. And of late, I think I've made 4 submissions and had 0 response. And these have been high risk, potentially money laundering involved, high risk, high value international transactions, and essentially we've had deemed clearance because we have had no response within that 7-day period. There is provision for an extension of the moratorium period on application to the Crown Court. Whether that is exercised, it's very costly, and a lot of the time the National Crime Agency will simply tip off the local police if they have suspicions, which they have done with my clients, and the local law enforcement will then investigate, and it may be they apply for an account freezing order, which is civil proceedings, or they decide to launch a criminal investigation into money laundering offending. Next slide, please. So under Section 336A of the Proceeds of Crime Act, the Crown Court may grant an extension of the initial moratorium period for a further 31 days. Obviously, this is going to be catastrophic to a business by this point. If your business bank account has been frozen and you have not been successful in making any representations, which of course we can assist with to the National Crime Agency, that this is completely unreasonable and business ending, then that could be the outcome. Further applications may be made of 31 days incrementally to a maximum of 6 months. Once a suspicious activity report has been submitted by a bank, it is not uncommon for the National Crime Agency to apply for an account freezing order, as I've said, if it has brought their attention to an unusual pattern of cash payments or large transfers to overseas bank accounts. Next slide, please. So we have some new guidance that was published this year. So on the 1st of June 2023, the National Crime Agency published its new guidance on submitting better SARs. And this updated guidance details changes made to the threshold for requesting what we know to be a defence against money laundering. The acronym is Danos, in effect from the 5th of January 2023 in the United Kingdom, which affects banks, deposit-taking firms, e-money firms, and payment institutions. On the 5th of January 2023, the threshold amount specified in the Proceeds of Crime Act, the relevant section therein, was increased from £250 to £1,000. This follows the coming into force of the Proceeds of Crime Money Laundering Threshold Order 2022, Order 2022. This amendment increases the value of property that banks or similar firms can act in relation to without needing to raise a DAML to protect them against committing an offence under Section 327 to 329 of the Proceeds of Crime Act. This was implemented for a number of reasons. It was to increase and improve the efficiency of the DAML regime for law enforcement agencies and deliver cost savings to the regulated sector, as of course this is a cost. If I'm making a suspicious activity report, which I may well need to if I have suspicions about my client's accounts and I'm paying it into my client account, it's at my cost that I make this suspicious activity report. In consultation with the National Crime Agency, the government believes that a threshold of £1,000 would reduce the burden on the reporting sectors without losing intelligence. I don't necessarily agree with that. Next slide, please. So I'd like to know what the audience thinks. We have a series of interactive polls. Ed will be activating said poll imminently. And the question that will be posed to the audience, and I would like to hear your responses to this. Obviously, there's been an adjustment that's £250 to £1,000 in terms of the threshold for submitting a suspicious activity report. Do you think the increased threshold is still too low? In my view, it's far too low, and I don't see how it would have much of an effect in terms of the reporting and the burden that is on the regulated sector. But I'd like to hear your views, and I'll give you a few moments if you wish to vote on this. Do you think the increased SAR threshold of £1,000 is too low? And we have a simple yes or no. And here are the results. So we think 70% of the audience, yes, and they agree with me, which is, I think, absolutely right. And I'm not saying to those that say no, which is 30% of you, that you're wrong. But in my view, if the reason is to cut down the burden on the regulated sector and costs and so on, that threshold should be higher. Okay, next slide, please. Moving on, politically exposed persons.
Brad,
Again,
sorry to jump in. Actually,
sorry.
I'm just going to give you a 2-3 minute warning if that's okay.
Sure.
If that's all right, just to keep you.
Sure, no problem. So politically exposed persons, and I'll canter through this because I've still got sanctions. Okay, so politically exposed persons, it's another risk factor essentially. And when you're in the regulated sector, it may be that you are dealing with those that are politically exposed persons. I know I certainly do, and I have a number of clients that are politically exposed persons. But you need to know the circumstances in which they are classified as such. And just briefly, the Money Laundering and Terrorist Financing Amendment Regulations 2019 established that firms must conduct client due diligence before they establish a business relationship, which can include simplified due diligence or enhanced due diligence. And this includes any transaction or business relationship involving a politically exposed person. So what is a politically exposed person? Next slide, please. We have a number of categories of what qualifies as a politically exposed person: members of parliament or of a similar legislative body, members of the governing bodies of political parties, ambassadors and high-ranking officers in the armed forces. Next slide, please. But it's of note that it's not just the individual, the client, the customer that you're dealing with. It's also family members and known close associates. So it's important to note that the status extends to family members or known close associates of PEPs. In fact, I recently had a client and he was involved again in a high value property transaction and thought he was a PEP. And he was actually really surprised that he wasn't a PEP. But unfortunately, the financial institution had classified him as such, even though it was a historic classification. And of course, we can make representations to the banks, as I have done previously, to successfully mitigate against that classification, which can be very problematic. Next slide, please. So a second poll, and I know that I'm running short on time. Do you think it's fair that the PEP status extends to family members? I'd like to hear from our audience whether that extension of the PEP status, do you think that it's fair that it encaptures that, given the implications of being a PEP and the difficulties that it causes in terms of dealing with PEPs in the regulated sector, onboarding, client due diligence and so on? Give you a moment or two. And we think, yes, 83% of us think it's fair. So great. We think that the fact that it captures extended family members and associates is robust enough to ensure that there are no issues if we do decide to deal with PEPs. Next slide, please. Next slide, please. We will whiz through to sanctions, where I will land. So you can see the three topics heavily publicised at the moment. They're all over the media. We know what's going on in terms of the various political climates globally, and sanctions are at the fore. And financial sanctions can range from the comprehensive prohibition of the transfer of funds to a target country and freezing of government assets to particular sanctions targeting specific individuals or entities. It is a criminal offence not to comply with a financial sanction unless you have an appropriate licence or authorisation of the Office of Financial Sanctions. If firms become aware of a breach, they must notify the OFSI. And the Sanctions and Anti-Money Laundering Act 2018 allows for a maximum sentence of up to 10 years for non-compliance, which I think is extremely noteworthy. Next slide, please. And finally, did you know that it is a criminal offence not to comply with a financial sanction? And I'll give you a few moments there. Did you know that it is a criminal offence not to comply with a financial sanction, and potentially you're looking at up to 10 years imprisonment? Excellent. So you're a very well-informed audience, delightful. So I'm just topping up on education around the sanctions regime. Next slide, please. There is more information and literature within my slides around the conflict in Ukraine, what's happening with sanctions and the sanctions regime in that respect. Next slide, please. And my contact details. So thank you so much for listening in and engaging. And feel free, if needs be, to drop me an email if you want to continue the conversation. I know we have Q&A at the end of the session, and I shall hand over to my fellow speakers.
Thank you so much, Fran. So sorry to cut in now. I know you've got so much to go through, lots of really interesting information. As Fran said, we're more than happy to do some follow-ups after the webinar today. But we just need to get through because we've got obviously another couple of speakers to come up and then a Q&A at the end. So thank you so much, Fran. On to our next speaker, and I'm really pleased to welcome Genevieve Rose, who's been with firms such as NatWest, Bank of America, Morgan Stanley, and most recently, coming up to 4 years, with Danske Bank. Genevieve has been Global Head of Financial Crime Compliance, but most recently moved into a new role as Group Head of their Post-Resolution Office. So Genevieve, over to you.
Thanks so much, Bradley. I really appreciate your inviting me to do this today. And Fran, I really enjoyed that because I think as financial crime practitioners, which many of us are on the call, we often miss the sort of the human angle of the impact of some of these things. In some ways, it's fantastic to know someone is reading the SARs, but on the other side of that, I do know that there's human impact there. And I do think, just a quick comment before I move into my own material, certainly when it comes to financial institutions and SAR filing, we don't always receive sort of the kind of dialogue or feedback you might expect that we do from various entities like the National Crime Agency. So just like you who have sent in what you think would be SARs of notice, we also experience that in quite large scale where we send in SARs and really never hear anything about those. Were they good? Were they bad? Were they helpful? And I think that there's a huge role of the public-private partnerships that is played in various jurisdictions. And I'm sort of speaking of my experience across not just the UK, but also other jurisdictions. Post-resolution office, what is that? So I've spent the majority of my professional career working in financial crime compliance. I have now a new job this year, which is that I'm heading up the post-resolution office for Danske Bank. As many of you will be aware, Danske Bank got in some trouble over the past years. And finally, we had a settlement with the US Department of Justice and other relevant agencies at the end of last year. As part of that, we have a plea agreement. We're on probation, just like you see in Law and Order. We're on probation until the end of 2025. And we have a number of obligations that we need to meet as a condition of the plea agreement. While many of those do relate to financial crime compliance, they're also across other areas, such as third-party risk management, human resources and compensation structures, as well as conflicts of interest and other conduct-related areas. I mentioned those, they're all in the plea agreement. It's publicly accessible, so you can have a look if you're interested. Just a quick disclaimer, the views I'm sharing with you today are mine. They're not those of the Danske Bank organization. They're not particular to any specific organization. This is my now 22nd year in compliance. So I've been gathering my evidence-based practice over a period of time now. But I'm going to start a little bit with assessing impact of financial crime transformations. I don't have slides, so I'm just going to kind of speak, and hopefully I can change themes in keeping with that. I myself have been working on a financial crime transformation for the last several years. Usually financial crime transformation programs are prompted by quite severe regulatory enforcement. Something serious has gone wrong in a number of different control areas, and the evidence of these failures is pretty clear and straightforward. So it's not really a question of when you will be fined or if you will be fined. It's kind of like, how can you cooperate to mitigate the overall situation? I do differentiate a transformation from remediation work in terms of the scale and kind of the prompting factors. I think many of us will have been involved in remediation work over the years, but I would suggest a transformation program is more the result of when there are quite fundamental gaps across quite a number of controls, where there has to be an enhancement of those controls to meet the regulatory requirements, as well as to take into account best practice standards. These transformations usually take several years. They are in fact exhausting, and they usually have some sort of accountability to regulators, and if you're lucky, to a monitor of some description. So in the US, it's referred to as a monitor, which can be appointed, could be a skilled persons in the UK. In Denmark, we have an independent expert, which has been assigned to oversee the delivery of our financial crime transformation program. So I wanted to share some thoughts with you that I've experienced in doing that. What makes it easier? What's difficult about it? I think it has a lot to do with the team that's brought in to run the program. Prior to kind of really being in the thick of transformation work, I might have considered myself a financial crime subject matter expert, and that was great, and it served me well in previous roles. But in terms of running a transformation program, you need people who are very experienced in program and project management. And I would say financial crime SMEs and those individuals are not always the same people, right? So, what you're really working on is trying to produce an audit trail which can withstand regulatory scrutiny in the future. You have to have great governance, and some of those things can only really be provided with people who have program and project management skills. You will encounter people who have a bit of both, if you are lucky, but you definitely need both points of view. I would also say that one of the keys in terms of having a successful transformation is around consistent communication. So the team that's leading a transformation needs to kind of go through that transformation, having the same messages with executive leadership and the board, as well as regulators. So ideally, although I realize it's not always practical, you kind of have the same team in place from start to finish of a transformation. That doesn't always happen, but I do think that that can be a component of success, because you don't lose those messages that have been previously communicated. You have some continuity there, and that's important. I think there's always the challenge of needing to execute quickly on a transformation, right? By the time that the DOJ settlement was announced last year, the actual activity that underpinned that settlement was 7, 8, 9, 10 years old. So I just do think sometimes when people see these things announced, it's easy to forget that it's not new news for the bank, especially. It may be public news, but that's been going on for a significant period of time, and the bank has had to act quickly. In my personal view, there will be a need to bring in additional resources, whether you hire them permanently, whether they're external. When you need to meet these deadlines and you need to have sort of this bulk of work done to a certain standard, you have to do something in terms of the resourcing. But one thing I would say is that in my experience, it's very important to kind of keep those messages clear in terms of how you will ramp up when it's time to ramp down. And also in terms of engaging externals, I think it's very important that permanent employees of the bank who are working on these items retain oversight and control of target operating models, right? I don't believe in buying target operating models. That can really create a difficult situation when the consultants have left and you have people who now own those target operating models, but don't necessarily believe in them the way that they should. Another aspect is fatigue. It's change fatigue. Most organizations have some sort of regulatory issues over time. I know it's easy in financial crime compliance to think this is the only regulatory thing that comes up in your bank, but it sure isn't. There's lots of other quite significant things that will be happening in a lot of different institutions, whether that be related to EMIR reporting, or, in my case at Danske Bank, there was a very public debt collection issue for some years. So there are other things going on. And so there can be fatigue in the organization around that. And so it's really important to operate with a sense of balance. I would also say staying dynamic in the program. Executing a waterfall project management plan for 3 years is boring. I won't give it to you any other way, right? And that waterfall plan really does need to be able to be adjusted to iterative learnings. So the more remediation work you do, the more transformation work that you do, the more you learn about how things function. What are the processes you have in place? What are the teams in your organization good at? So you have to be able to revisit that plan over time and make sure that it is realistic and in keeping with what you've learned. It can't just be, well, I wrote the plan 3 years ago and we will just do the plan, right? That is just not a great way of doing things. Moving on to the crucial role of cultural change in terms of strengthening financial crime controls. I don't think transformation or remediation programs can be effective without cultural changes. But why is that? So transformation programs usually require employees to do something different. Process changes, requirement changes, and change creates uncertainty. It can make people feel incompetent, right? That's just not a great thing. There's more work. There's a sense of a loss of control. There's sometimes a sense of blame for the root cause that occurred. Though it's generally my experience that no single person can be responsible for these things, right? It's collective and over time. So there has to be an adaptation of the culture in order to ease some of these very valid feelings, because ultimately controls are operated by people. What is my kind of suggestion around that? I don't say this out of having done it perfectly ever, so I should sort of kind of wrap that up a bit. I really think that transformation programs probably don't have sufficient communications and cultural change work streams in them. When you're doing a change program, you may have a sanctions work stream, a transaction monitoring work stream, a KYC work stream. But have you really looked at cultural change as its own work stream, communications as its own work stream? Those are very powerful pieces of making actual change. I don't think creating a few new e-learning modules for all of the staff to take on anti-bribery and corruption is a way to affect cultural change. I would also suggest that most of the reporting in terms of progress of a transformation is given to the executive leadership and the board. So many times you have an organization where people are very aware that this special little team, or they think they're special, of financial crime compliance and the first line financial crime teams are doing all of this change, right? But they have no idea what's going on. And so I also think making sure to socialize these things within an organization beyond those stakeholders who make budget decisions is really important. Finally, I just want to touch on tone from the top. And this kind of is an easy segue. I don't think tone from the top on its own is sufficient for cultivating a culture of compliance. It just isn't. We place a lot of stress on tone from the top because those are the individuals who need to approve the budgets. Those are the individuals who need to make sure that their teams are reprioritizing to do the work. And in many situations, those are the individuals who ultimately have a regulatory accountability, whether you're an SMF in the UK or there are other similar roles in other countries where you have that similar liability, right? But I've rarely encountered an executive in recent time who isn't happy to say compliance is very important, right? That's not the same thing as creating a culture of compliance. So I think, how do you kind of then look at this? I think that one of the tricks of culture of compliance is, how do you measure it? How do you even know that you have a good one, right? What are the things that you use to look at non-compliance? And probably equally as important, but not something we focus as much of our attention on, which is incentivizing compliance, exemplary, situations of compliance, making a stand when it was difficult, right? We as compliance officers, that's sort of our job. But what about other employees who are doing that and really living the compliance requirements of an organization? We focus a lot on breaches because that's what we have, right? And I don't have all the solutions for this, but I do think that, we're quite focused on negative. We should also be focused on positive, right? The most common way we talk about incentivizing compliance is through variable remuneration. Let's just be serious. Bonuses. You get a bonus. You don't get a bonus. There's some sort of clawback later if it's found that you didn't live out compliance requirements. Not everyone in an organization is eligible for variable remuneration. That, myself, currently I'm in an institution where there's a huge retail presence. Like, right, there's not, people who are working in retail branches don't have necessarily the same compensation structures as executives. So how do you incentivize them? Because they're such an important part of first-line financial crime prevention. So I would suggest that one of the things that I would like to see, and that I personally hope to continue to work on in the coming years, is the connectivity between human resources organizations and compliance and risk departments. Traditionally, culture has been the domain of human resources, and compliance has been the domain of group compliance and risk organizations. Without bringing those two things together, it's very difficult to affect a culture of compliance in an organization. I have noticed that there are many things that human resources does that as initiatives, which don't necessarily have direct links to compliance, could be enhanced to be very closely linked. And I think that our human resources organizations have access to a lot of data about what actually goes wrong and when, that we in group compliance aren't actually feeding back. I realize some of these things are confidential, and that's sort of the tension between doing this, right? But I really do see that if we want to be achieving a culture of compliance in organizations, group compliance, being in charge of that, is not sufficient, right? It is a cross-functional effort. And if I want to talk about tone from the top, you have to see this coming from the executive leadership team of an organization. They have to be interested in connecting the dots between these things. On that note, the DOJ has guidelines on compensation structures and consequences management. This, again, does really speak to executive compensation. I do think we should focus on executives, and we could continue to do that through the very tangible and direct medium of variable remuneration. That said, when we talk about a culture of compliance and outcomes, longer term outcomes, I do believe that there has to be a way to put this into different layers of the organization, where money potentially isn't the only motivator to do the right thing or to not do a wrong thing. And so I do feel like that's an interesting new front for us as compliance officers. And that is it. So thank you very much.
That was perfect. Thank you so much, Genevieve. Really, really appreciate it. Before we move on to our final speaker, I'd just like to remind everyone, if you have any questions for the panel, please do drop them into the chat box, and we'll try and get through as many as we can before we finish. But now moving on to our final speaker, and I'm very pleased to welcome Alan Ketley onto the call. I was lucky enough to work on the search to find the executive secretary for the Wolfsberg Group. And when we were conducting the search to find Alan, literally everyone we spoke to for recommendations said Alan. Alan is a legend of the financial crime world. He's held senior positions at MUFG, Societe Generale, Morgan Stanley, and has been in his current role as the chief exec of the, or executive secretary, should I say, of the Wolfsberg Group for about 2 years. So joining us live from New York, please welcome Alan Ketley.
Bradley, Dennis, thank you very much. Legends are usually dead, so I should feel nervous about that. One of the neat things about going last on this is that most of the good things have already been said, but it also gives me an ability to comment on some of the things that Fran and Genevieve have spoken about. I'm going to riff on what I was planning on speaking just briefly. Fran spoke about change in the UK. There's a lot of change everywhere. Both Fran and Genevieve spoke about feedback. Feedback has been a theme of Wolfsberg work for a long time. And even before I was part of Wolfsberg, I was at a meeting in New York with representatives from various law enforcement agencies. And I must have been feeling particularly awkward that day. Because when the law enforcement folks said with some degree of pride that 15% of the SARs that the industry was giving them were very useful, I was the one that put my hand up and said, well, does that mean that 85% of what we give you isn't very useful? And that was greeted by much looking at feet and much mumbling. But to give you an idea of the scale, I mean, Fran spoke about dozens, hundreds, thousands of SARs. In the US, the depository institutions, which is a fancy term for banks and savings institutions, filed 1.8 million SARs last year. That is an enormous number. And the feedback that the industry gets is nowhere near what it should be, what it could be. And I don't know about any of you, but if I didn't get feedback when I was at school and at university, I wouldn't have graduated. So, we want people to graduate. We need better feedback. I'm going to pick up on something that Genevieve said, and I'm going to quote, I'm going to paraphrase a very insightful line from a source that you might not have thought could be a useful source. And I'm referring, of course, to the film John Wick 4. And the paraphrase there is that tone from the top means little when it's convenient. And I was watching the film on the plane the other day and thought, yeah, I can buy that. All right, so change. There's a lot of it, both at 30,000 feet and at the tree line. The UK changed some SAR guidelines. It's also looking at its money laundering regulations, as well as looking at reforming supervision of the entire sector, not just banks, but the entire sector. In the US, they're looking at the AML Act, which is a revamp of the Bank Secrecy Act and the anti-money laundering and sanctions regime in the US. They're also taking steps to put in a corporate transparency register, beneficial ownership register, which I think many of us thought would never happen. I don't think it's been funded yet, so it may not necessarily happen, but there is a lot of work going on with it. In Europe, in the European Union, there's the AML Act, and what you might see in the headlines most at the moment is, I think it's 8 or 9 cities vying to host the AML authority. This is a really big deal. This is a new super regulator that is going to directly supervise the 40 most significant financial institutions in the European Union, and will act as a supervisor for the supervisors for all the others. That's a snapshot of what's going on at the 30,000 foot level, but there's also things going on at the tree level. You might have heard about ISO 20022. That is a new format for payment messages and for communications messages. And that is in a rolling implementation that started earlier this year and is due to wrap up in 2025. It sounds really boring. It sounds really nerdy, but it's the biggest change in 2 generations in messaging and payment systems. And what it means is that for the first time ever, the formats used in payments for individual countries will match the formats that are used for communications between countries. Why is that a big deal? It's a big deal because they don't match now. So you can put more in one than you can put in the other, which results in all kinds of data problems for everybody involved in the process, as you all no doubt know. The Financial Action Task Force is also updating several of its recommendations. And while Financial Action Task Force is just about recommendations, the FATF has enough clout that those recommendations tend to work their way into law. One of the biggest things that in our view that they're working on at the moment is updating recommendation 16, which is about the information that has to appear in payments. That feeds into what's going on with the ISO change. So all these things are connected. So let me back up just a little bit. Who is Wolfsberg? Hopefully you all know who we are, but if not, we're one of the oldest collective action groups in the world. We came together in 1999 and have remained together with a focus on issuing guidance and standards papers written by practitioners for practitioners in the financial services industry globally. Unlike the Financial Action Task Force, our papers do not have the force of a recommendation, which feeds through into law, but we are seen as a credible private sector voice for regulators, for academics, for banks in countries who may be asked by their regulators to do something. And then as they're trying to figure out how to do it, they may find their way to some of our work to get some indications and guidance as to how to do it. Everything that we publish is on our website, and you can sign up for updates via the website or connect with us through LinkedIn. And our most recent publication gets into the subject of payment transparency. This is one of those things that looks really simple at 30,000 feet. Person goes to a bank or a payment services provider, tells that payment service provider, I need to send money to another person, and then it's done, right? Well, no, it isn't. It's very complicated. It used to be very simple. It used to be very expensive. It's not as expensive anymore, and arguably it's simpler, but it has resulted in a lot of innovation, which is normally a really good thing. But innovation has resulted in payment systems being used in ways that they were never imagined to use. So let me make a UK example. And you all know about the Bankers Automated Clearing System, BACS. It was designed in the UK to do low-value domestic repetitive payments. It doesn't do that anymore. It does so much more. It can be used for collecting and dispersing at either end of a cross-border transaction. And part of the challenge with that is it was okay if Dennis was sending money to Fran or Fran was sending money to Genevieve, because they all hold accounts in the UK. Well, apart from their Cayman Islands accounts, which they haven't disclosed to anybody yet. But if that system is now being used to do the collection of funds in the UK before they are sent overseas to another country, BACS doesn't have capacity in it to handle all of that information. So one of the things that we've suggested, and I'm not going to go through all the suggestions, you can read all 23 pages if you're interested and curious, is that if you run a payment system, you should have some responsibility for telling its users what they can use it for and what they can't use it for. If you run the UK NCA, you should have some kind of obligation to give feedback on the SARs. So I see that we're close up against time. I want to make sure that there's time for Q&A. So I'll stop it there, and you can reflect upon John Wick and Cayman Island accounts at your leisure.
Thank you, Alan. Really appreciate that. And especially joining us from New York in the morning. Really appreciate the early start.
Right, so let's jump straight into the Q&A. As we're going along again, if you have any questions, please do add them into the chat box. But we had a few sent in beforehand, so I'm going to send the first one to Fran, if that's okay. So Fran, do you think the maximum 6-month extension of the SAR moratorium period is long enough?
In my view, yes. I mean, given that the devastating consequences I mentioned of the imposition of a suspicious activity report, meaning the frozen funds in a business bank account are not accessible, meaning the business cannot operate. I think 6 months is probably just about enough to salvage a business any longer. And I'm seeing it in terms of account freezing orders, which can be imposed for up to a period of 2 years. It is game over.
Oh, perfect. Thank you. Next one, Genevieve. We'll keep the order the same. So Genevieve, how do you balance an institution's need to keep compliance cost consistent and relative to its size risk profile with the periodic need to direct resources away from certain aspects of business, as usual, in order to resolve gaps that have been identified in the control framework?
I think this is a matter of prioritization, right? So the business will always have business as usual tasks, and sometimes those things spike. So a particular instance I would raise is the issuance of the many thousands of sanctions in relation to the Russia, Ukraine, Belarus war, and so those, when I came for me at a period where we were also in the midst of a transformation program, right? And we're kind of looking at what is the need to comply with these sanctions, deal with live questions. When you start stopping a lot of payments, customers start calling, right? And I think there just has to be kind of a clear communication within the organization to say certain things are going to need to stop in order to do other things. And that's really the only way to deal with it. You can't just bring in a bunch of people that quickly, right? So you have to stop doing some things and start doing others and kind of refocus quite flexibly.
Thanks, Genevieve. And Alan, obviously talking about payment transparency, why does that matter? What is so important about payment transparency?
It sounds so boring. It sounds so nerdy, right? Payment transparency. Oh my God, these people are going to talk about payment transparency again. But let's bring it down to a really basic level. It's really nice to have somebody send money into your bank account. What a great feeling that is. But payment transparency means you know who it came from and what it was for. That's really important. If you're a business, you need to know which customers are paying their invoices and which invoices they're paying. If you're a person and you receive 3 transfers on your birthday, you kind of want to know who sent which amount of money, partly so that you can thank them, but also you can have a quiet joke with them about their lack of imagination. And if you're a payment services provider, a bank or a money service business or a VASP, then you need that information in order to be able to complete your regulatory obligations. I worked with somebody when I was in the business in cash management years ago before I joined compliance, who said, maybe we should stop charging our customers for payments and we should start charging them for the information associated with the payment. Because the large corporation or the bank that is expecting 10 amounts of 5 million today is really only interested in the one that didn't come in. Payment transparency matters. It's not just a nerdy thing.
Thank you, Alan. I've got a question that I'm going to throw open to whoever wants to try and answer it on the panel. We talk a lot about artificial intelligence and how that's going to revolutionize, everything. Is the panel excited about the potential of AI to influence financial crime, or nervous about the potential for AI to influence financial crime?
I'm happy to quickly answer this one. So neither. Like, I'm not nervous and I'm not excited. And I think that's because I have an inherent skepticism about the use of AI, because it's not so much not that I'm not an AI expert, which I'm not, but I also feel as though I encounter enough difficulties explaining how we have set up controls within the bank to regulators without the complexity of these types of things. And I feel as though AI is often used as sort of a catchphrase, an attractive way to say, oh, we're doing something different and important, or we can get rid of people. And I just don't know that any of those things are kind of proven to be the case at this stage. And I also think that whatever new technology that you implement as an organization, you must be able to, and I'm not talking about your technology people, your compliance and risk people must be able to describe that in sensible, practical language to your regulators. And if you can't do that, it isn't worth much. And I just haven't found a ton of people who have told me a story about how that's happened in their institutions yet. That isn't to say it isn't happening or it won't happen. It's just that I am a cautious skeptic.
So I'll jump in as well on this. I'm profoundly nervous. Like any other new technology, it promises to solve everything for everyone. But there are plenty of reasonably credible things out on YouTube indicating what generative AI can do. It can hear 3 seconds of your voice and then clone your voice. If you Google, "I am not Morgan Freeman," you can see something that will scare the pants off you. And the illicit use of AI, whether it be cloning how somebody looks or replicating their voice, or even producing plausible answers to compliance inquiries received via email, worries me. I think it offers potential for doing smarter analytics and smarter analysis, but it worries me how it might be used against us.
If I may piggyback Genevieve and Alan, very simply and shortly, it will lead to an uptick in my instructions, because when there was the introduction of digital assets, cryptocurrencies, any new kind of technological advances leads to loopholes, floodgates, and so on for financial criminals.
Thank you, guys.
On that happy note.
We've had one question coming on the chat from Anuka. Alan used to work with you at MUFG within financial crime. Great information on payment transparency. It's super important. What do you think are the common red flags with payment transparency?
Great question, Anuka. Blank fields, truncated data, information in the payment which makes no sense in the context of a request for information that's been done. It is sometimes quite scary how you will discover when you ask about a payment, the information comes back that may reveal the existence of another party in the transaction. ISO at least offers the promise of being able to deal with some of that because there are more fields and more ability to have information in it. But that doesn't mean that people will use those fields, and it doesn't mean that they will use them properly. There's a lot of ISO evangelists out there who think that the coming of ISO will solve everything. But I'm going to be the downer on this, and I will point out that we've had 40 years of MT messages, and there are still customers who can't format them properly.
Thank you, Alan. Well, that's time, everyone. I really want to thank our speakers, Fran, Alan, and Genevieve, for joining us today. That was really informative and really interesting stuff. Obviously, everyone who logged on, thank you very much for joining us. I think you'll agree this was a really insightful 60 minutes. If you have any further questions for the panel, please do drop myself or Brad an email, and do look out for our next webinar, which we will be announcing very soon. Have a great day, everyone. Thank you very much.
Thanks, everyone.
Thank you.